Okay. Hello, everyone. Thanks so much for joining us today. My name is Greg Lewis. I'm the marketing manager here at MetaStock, and you're joining us, or I should say, I'm joining you live from our satellite studio here in Southern Texas. Today's presenter will be Jeff Gibby. It was supposed to be Edward Stemplevich, but Mr. Stemplevich has come down ill, so Jeff is going to take his place. Not to be worried, Jeff is a very capable presenter and very knowledgeable of the market, of course, and of MetaStock, and one of our greatest employees really ever. He'll be coming up in about 3 minutes. I got a little late start, so I got to kind of hurry up and get some things in here. One, I wanted to let you know about if you are in, let's see where we're at. Okay, if you're in India, we are coming to visit you live on July 20th and 21st. If you want to see more about that, go to metastock.com/India 2024. Metastock.com/India 2024. Now, let's see. Excuse me just a second while I try to change that page. Now, if you are in London or Hong Kong, we are also coming live to those areas. And if you'd like to know more about that and to register attend, go to metastock.com/seminar. That is metastock.com/seminar. And the presenter there, that'll be a 2-hour presentation by our very own Scott Brown, who's the president, CEO, and owner of MetaStock currently. He owns the MetaStock name. He seems like a pretty good guy you'd want to talk to about all things trading in MetaStock, and you will have that opportunity on January 16th in Hong Kong and January 25th in London. That is a free event. Go ahead and go to metastock.com/seminar to enroll. Now, if you are in the Singapore area, I mean, we're just on a major world tour here, and you want to see us live, go to metastock.com/Singapore 2024. That event is on, I apologize, I can't see that print. For some reason, the browser embedded in this streaming software is so small. Anyway, that's coming up soon. I think it's next week. The presenters will include CKEE, a local authority on stocks, and and also it includes Scott Brown. So don't hesitate to attend that. Go to metastock.com/Singapore 2024. Now, I have to get back over. Okay, let's do this. Oh, sorry, folks. Give me just a second. Okay, now coming up quickly in an hour or 1 minute and 38 seconds is going to be Jeff Gibby, as I said. And before that time, make sure that you go ahead and like and subscribe if you do like it, and ring that bell so you can be notified of every time we have a live event, which is usually 1 or 2 a week. Jeff today is going to be talking about the power tools in MetaStock. And again, I know you're really going to enjoy it. Don't hesitate to ask questions. Don't hesitate to be involved in the conversation. By the way, I see we have people here, plenty of people here on YouTube. Say hello. Go ahead and say hello. Let us know where you're coming from. And if you chat in, Jeff is monitoring that during his presentation. So if you have a question during this presentation, don't hesitate to ask Jeff. He will tell you a good answer for any question that you have. Just try and stump him. Maybe you can ask him something he doesn't know. I would be surprised because, again, he's been doing this for 25 years or so, and I think he's pretty good at it. Anyway, I'm going to go ahead and let you listen to some jazzy music while I have a second to make sure Jeff's ready over there, and we'll be back in 30 seconds. Thank you so much again for joining, and don't forget to like and subscribe, and successful trading. Oh, Jeff, for some reason I can't hear you. Give me a second. No, you seem to be muted or something, Jeff.
Yeah, like does that probably helps if I hit that
That's
button.
a lot better. How are you? Hey, I'm curious. Before we proceed, how is what's the weather situation there in Utah?
It is. We're getting a lot. We're being blessed with snow. Lots and lots and lots of snow. In fact, I'm going to go home after the event. After this webinar, I'm going to go home because it's snowing so bad that I'd rather be home. So actually, we've sent most of the office home to work from home, of course.
Well, I
But
completely
yeah,
understand
it's
that.
coming down.
Well, I'll let you. Let me just take a second to tell you. First of all, it's a balmy 76 degrees and sunny here in the Rio Grande Valley of Texas. So, hurrah! And I'm sorry that you're not having better weather up there. But you do need the snow, and so it's great to get snow in Utah. Hey, I just want to take a second, folks, to tell you that Jeff Gibby is our Director of Sales and Business Management at MetaStock. He's been in the company for many, many years. I always forget. I want to say it's 25. He'll correct you. He is the loving father of children and daughters and dogs and husband, and he's fantastic presenter. Jeff, how many times do you think how many webinars would you say you've done in your esteemed career with MetaStock?
Thousands, easily
Yeah.
thousands, especially if you just count all the ones where I've kind of hosted or whatever. It's up there for sure.
All right.
So.
And I did mention to the folks before we came live with you that we have a lot of live events coming up. That's included in Hong Kong and London and Singapore and Sydney and India. If you want to find out more about those, I will be posting them along the way and showing how you can register them in the chat. Otherwise, Jeff, I will let you get on with it.
All right.
Break a leg, sir.
Cool. Well, thanks for coming, everybody. Very snowy day here in Utah. I hope you're staying warm, healthy, all that kind of good stuff. I actually, Greg says, how many years has it been? And I had to think about it, and I actually need to go check, but I think it's like 27, maybe 28 this year. So maybe, I think it's actually 28. Crazy. You know how I keep track is actually it's two less than the number of times. I think it's two less than the number of times we've been rated the number one software in our price category. So in any case, my name is Jeff Gibby. I'm going to go ahead and kick things off here with a legal disclaimer, and then we're going to talk a little bit about like using the MACD and try finding a good system and strategy that works for you. In case you're wondering, I'm not Edward. Actually, Edward won't be able to make it today. He's sick. He actually has the coronavirus, but I'm sure he'll be just fine. But I'm filling in for him today. So let me go ahead and kind of read this. Today's demonstration is designed to instruct you on using MetaStock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock should have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. MetaStock does not endorse the purchase of a security. It's not paid for the promotion of any security. And the information contained in this presentation should be construed as investment advice. Should not be construed as investment advice or a solicitation to buy a security. So there you go. I do have both. Actually, I don't have both of the chats open just yet. But if you do have questions as we go, feel free to kind of chime in, ask about them, all of that kind of stuff. I'm gonna kind of have some fun today. So thanks for coming. I hope you're well. Let's go ahead and just get started. So as we said, as Greg said, I've been here for a long time. There's only a couple of things I'm going to say about the company. It's a great place to work. It's a great software to represent. The people that work here are really good and do a great job of supporting the software. It's not uncommon for us to get completely perfect 100% reviews from people that use the software and contact our support. They do a really good job, and that's, I think, one of the really cool things about MetaStock. I started, like Greg said, a long time ago, and for the first 10 years I did sales. That was a lot of fun. For the last 15 years or so, I've had different various jobs in business development. We do a lot of online work and that kind of stuff. It's been great for me personally. I use the software every day to find trades. I trade very actively. when work doesn't get in the way of it. But also it's also been a great learning experience for me too. So I'm very, very grateful about that. The one thing I'm going to say about MetaStock before we kind of kick off is for 30 years in a row, it's been rated the best software in its price category for 30 years straight. So that's something that we really, really, really like to talk about. So with all that being said, let's go ahead and get started. Today, what I want to talk about is the importance of trading with a plan. I'm going to really teach a big plan. I'm going to teach a lot about like the MACD indicators, kind of to help you understand what a trading plan is all about. We're going to talk about testing trading ideas, and we'll even do a special offer. If you're interested in getting software that's been rated #1 in its price category for 30 years in a row, stick around. We have a really, really cool offer to help you get going. So in any case, as I said at the top, if you do have questions, let me know as we go. Happy to follow those up. Good to see a lot of you in the chat and here today. Larry, I'm very hello. Thomas, hello. As you come in, say hi. Okay. If you're not familiar with this guy was actually his official nickname was the Prince of the Pit. And I have some notes. I don't have them committed to memory, but like if I jump out real quick here, you can kind of read some of these notes that I've put down for him. I should have these memorized. Actually, I've talked about them or not. But this is Richard Dennis, Prince of the Pit. I bought about $1,600 and made about $350 million trading futures within about 6 years. Very, very famous trader in the 1980s. And one of the things that he believed that he could teach people how to trade. So that's Bill Eckhart. In 1983, he had a partner, Richard Dennis and Bill Eckhart. Yeah. So this is Richard Dennis here. Bill Eckhart was his partner. Bill Eckhart believed that you couldn't teach people how to trade. That isn't something that you could do unless you had the right genetics, all that kind of stuff, right? And so they had a bit of a gentleman's bet. And this, if you've heard of the turtle traders, this is exactly what they are. They ended up training a group of 23 people. 2 of those were female traders, and 21 of them were male traders. They were known as the turtle, funded them with their own money. They gave them all each between I think it was $500,000 and $3 million. And within about 5 years, teaching some very, very specific rules, they were able to get an aggregated profit of $175 million. So very, very successful experiment, something that kind of to Richard's point, proved that you could teach people how to trade. And if they have the right rule sets in place, they'd be able to trade successfully. So with that being said, one of the things I'm going to ask you to kind of answer in the audience, if you're watching, what do you think is the best profession for trading? Okay, what do you think is the best profession that you can be part of as a trader? Okay, and go ahead and give me the answers. One of my favorite quotes. There's a couple quotes that came out of Richard Dennis that I thought were really good. But here's one. I always say you could publish his rules in the newspaper, and nobody would follow them. The key to trading is consistency and discipline. So MetaStock is not professional saxophone player, but good guess. Good guess. And actually, he's kind of a little bit retired, but Ken Calhoun was a pretty good saxophone player, if I'm honest. Do you guys have any other guesses? What profession is the best profession to have when you're trading? Go ahead and answer in the chats. A good common answer that we get very, very frequently is psychologist or psychiatrist or something along those lines. And I think that's actually a pretty good answer. Now, there's a couple people that I know that we work with in the markets that are actually psychiatrists. Like Jake Bernstein started his career as a clinical psychologist or psychiatrist, one of those two. I think it was psychiatrist, actually. And he went on to kind of write dozens and dozens and dozens of books about trading and futures trading. A prolific technician, does a really, really good job. Another favorite of mine is Dr. Alexander Elder, who started as a psychiatrist or psychologist. I think it's actually psychiatrist. Obviously he does it good. So I think there's some truth to that. Larry, you had the right answer, and so did MetaStock after a few tries. And MetaStock should know, so I think he's just playing around. It's actually an airline pilot. So an airline pilot obviously has a lot of discipline in what they do. They have a checklist, that kind of stuff. So the purpose of what I'm going to talk about today, and what I want to kind of spend a little bit of time on, is MACD. And just more, MACD is there's a couple reasons to talk about MACD, but there's really kind of a couple. So the reason I kind of decided to do MACD, if I wanted to kind of sum it up, is it's a very simple methodology. So if I kind of do a pretty good job of explaining it, you'll understand it. There's really, the indicator is very easy to understand. The values that it gives are pretty easy to understand. The three ways that I'm going to talk about interpreting of it is going to be pretty easy to understand. But what I want you to understand is kind of, if you're looking to create an objective way of looking at the market, what I want you to understand is it doesn't have to be difficult, but what it does need to have is a lot of objectivity to it. So at no time today, when we talk about any of the trading methodologies that we're using, or we're going to be talking about, well, I think the Fed is going to kind of get a little bit more dovish than it was last year, which I do think is going to happen, right? But what we're going to be doing with technical analysis is saying, okay, what is the market doing? Where is support and resistance? What does the trend look like? With MACD, we look at trend and we look at momentum, and we let the market tell us what we're doing so that we can kind of make a decision around that. So, in case you haven't guessed, thank you for the answers, everybody. In case you haven't guessed, though, this guy right here is Gerald Appel. Gerald Appel was a great technician. I know that he passed. I think he passed in 2020. It might have been a little bit more recent than that, but a very, very good technician, the creator of the MACD. And so we're going to talk about the MACD and how that works. Let's go ahead and kind of get into it a little bit, okay? If I wanted to show you, and I'm going to show you exactly how to calculate a MACD, but if I wanted to tell you how to calculate a MACD, what I would do is you basically say that you calculate it using a 0.075 exponential moving average from a 0.015 exponential moving average. If you took the difference between those two numbers, that's going to give you the MACD line. Now, 0.075 and 0.15, those aren't exact numbers. It's not the same thing as kind of saying a 26-period exponential moving average and a 12-period exponential moving average, but they're the closest ones that match up. So for the purpose of kind of like what we're going to talk about today, I've got a chart open of the S&P 500 right here. And for the purpose of what we're going to talk about today, I'm going to use those moving averages.
Hey,
so let me just kind of clean up. What?
Sorry. Right now, I'm still looking at your finding the right strategy open screen. That's all I've seen since you've been speaking. So I don't know why we're not seeing.
Well, thank you for letting me know.
Now I see MetaStock. I'm sorry. I should have let you know sooner. I wasn't quite aware.
That's okay. We're just here. Okay, no problem.
Sorry about that. So yeah, you're good to go now.
All right. There's whole slides to go with everything I just said, but they're that important. So anyway, oh my goodness. Also, scared the crap out of me, Greg. I don't generally expect somebody to talk. Okay. All right. So let me go back to this slide real quick. Right here, what we're doing. Okay, this is a picture of Gerald Appel. Okay, here's a picture of Richard Dennis. And if you want, I even kind of went into the notes. There's the quote. All right, cool. You didn't really miss too much. There's another slide that talked about how we've won. MetaStock has won the 30 years best software in its price category. So this is what we're talking about here, though. Let's talk a little bit more about how to calculate a MACD and what it's doing. Okay, so let me go ahead and come in here. I'm going to go ahead And just do a couple things. I was actually just looking at this earlier. I want to clean up the comment. Actually, I want to clean up the chart a little bit. So let me go and just do that and detach. We're not going to need stochastics on here for what we're doing. We're not going to need all of these moving averages either. We're just going to use the 26 and the 12 exponentials. Okay, so let me go ahead and kind of just clean it up. Right now, we're just looking at a candle chart. And what I'm going to do is actually just add a couple moving averages. So this is right here is what we call our indicator quick list in MetaStock. If you don't have MetaStock, I'd recommend you get it. There's a couple of 100 indicators in here. And of course, it's going to have moving average and MACD histogram, which are the two that I'm going to use. What I'm going to do is I'm just going to basically drag this off and drop it on the thing. And we're going to make a 12-period exponential moving average based on the close. Okay. I'm going to decide as soon as that plots that it's not big enough, so I'm going to double click into it. I'm going to make it a bit thicker, just so you can see it a little bit better. So we go ahead and, what is that? That's fine. Okay. So right here, this red line is basically a 12-period exponential moving average. Okay. Now what I'm going to do is I'm going to grab the 26-period, or grab the same tool. I'm going to make a 26-period exponential moving average. And I'm going to check my notes real quick. Yeah, I want to, I have it in my head sometimes it is 25, and sometimes I show it that way. It's 26 is the closest one. Okay, so that stands apart from you, or for you. I'm going to make it a little bit blue. I'm going to still make that one a little bit thicker. So right now, we're looking at the S&P 500, by the way, in case you're interested in it. Right now, we're looking at two moving averages, a 26-period exponential moving average right here, and a 12-period exponential moving average. If I wanted to do a MACD, and I just noticed I don't have questions open, so let me pull those open real quick. I'm not sure how those got closed. But if you do have questions, let me know. Okay. If I wanted to calculate MACD, it's a very, very easy calculation. What I'm going to do right now is just kind of pull out the MACD histogram indicator. Going to drag it and drop it. And for now, there's a whole bunch of plots that are going to come on. I'm going to make them all invisible except for the one that I want to talk about right now. Okay, so we can kind of go through it one at a time. So we're just going to look at MACD right now. We're not going to look at the signal line. We'll talk about that in a second. Okay, and I don't like where that was, so I'm going to put it up here, just in its own window. Close this one down, and that's exactly what I want to look at. Okay, I'm also going to make that visible line a little bit fatter for you so you can see it. And then we're just going to talk about it. Okay, so if I was to take the difference of the 12-period exponential moving average and subtract it from the 26-period exponential moving average, the value that I'm going to get is going to be very close to this MACD histogram value. It's not going to be exact because it's not using 12 and 26, but those are close. Okay. What I want to impress upon you is that we're looking at the difference between two moving averages. And I think the better that you understand that, the more you can kind of understand the way the MACD works, okay? Because if I'm comparing a shorter term moving average with a longer term moving average, if you know that that's what you're doing, you can kind of understand why the MACD behaves the way that it does, okay? For example, if we're in a pretty good, I'd say we've been in a pretty good uptrend in the S&P. If we're in a pretty good uptrend of the S&P, what's going to happen with that is as you kind of go up, and let's just say that we're still in this uptrend, over the last 53 periods, we've gone up about 17%. Okay. If you're in a pretty good uptrend during the MACD, what's going to happen is your shorter term moving average is going to come up above your longer term moving average, and you're going to get a sustained value above zero. Okay, so like right here where we're kind of down below zero until we cross up above the MACD, that's simply happening because the shorter term moving average is starting to come above the longer term moving average. So if you're in a positive trend, that's going to be indicative of that is you're going to have positive MACD values, and you're going to have higher peaks and higher troughs. Okay, very simple. Okay, and the reason that happens is because we're comparing a longer term moving average to a shorter term moving average. That's all it is. Let me go back a little bit, because before that we obviously weren't in that big of a trend. But if we're kind of in a downtrend, the exact opposite is true, right? So if we're kind of in a bit of a downtrend, I'm going to call this a downtrend for the purpose of kind of today's demo. But if we're in a downtrend, you're going to see your MACD is going to be down below zero. You're going to see deeper troughs and lower peaks, deeper troughs, lower peaks, okay? Also, because you're looking at the difference between two moving averages, there's a bit of a momentum built in, meaning the faster we go up, the bigger the separation is going to be between that shorter term moving average and the longer term moving average. And that helps us look at momentum, okay? And so like I just kind of throw all these things out as observations, but basically you're looking at when it comes down to it, you're looking at a short-term moving average and a long-term moving average. If price is heading up, the distance is going to be different or get bigger. If price is heading down, the prices are going to basically eventually cross zero and be bigger. And it's very, very obvious stuff. Okay. But I think it's important to kind of understand this stuff because it helps you kind of understand the indicator of what's going on. So that's just the MACD line. It's the difference between a shorter-term moving average and a longer-term moving average. Okay. The second line, and I'm going to kind of talk about just the second line now. We'll go ahead and turn it on. Let me double click here. I'll come down in here and make the what they call the signal line visible. I'll go ahead and click on OK with this. Okay. Now it's dotted. It's a little bit harder to read. I'm going to actually make it quite a bit fatter so you can see it. The signal line is basically a 9-period exponential moving average of this differential. So the MACD is going to be the red line. The 9-period exponential moving average of the MACD is going to be what Gerald Appel called the signal line. Okay. And yeah, I'm going to go ahead and kind of talk about how that's used and a couple of different ways that you can use it using a popular MACD interpretation. The first way that you can look at MACD is as trend identification, and we'll talk about that. So if I wanted to look at trend identification, when this MACD crosses up above its signal line, which happens right here, okay? When that happens, that's called, when that happens, the MACD goes into a bullish phase, okay? And what that indicates is that prices are likely going to start to go up. Now, it doesn't happen all the time. It doesn't happen every time. It's certainly not a black. It's not like a crystal ball or a magic thing or anything, but it's indicative if we're in a MACD bullish trend. The belief is that the prices are going to go up. The MACD is then bullish. Okay. When it comes down, as it does right here, and crosses down below its signal line, you can see that happens for just a brief period here, then it's going to be entering a bearish phase. Conversely, when it comes back above, which it does right here, it enters a bullish phase. Conversely, right here, and still it has entered a bearish phase starting right about here and has been in that bearish phase for a number of periods. Okay, so the very first way I'm going to talk about the interpretation of how you can use MACD is you can use it as a signal. Okay, and that's why Gerald Appel called it the signal line. If our anticipation is that the market's going to start to go up, because we're entering a bearish phase of the MACD, the corresponding move is we could buy into that security, okay? Because we anticipate that price is going to rise up. If it comes back down and gets into a bearish phase, we would anticipate a pullback, okay? And so we would act accordingly. And that's how you use MACD as a signal line, okay? Is it bearish or bullish? Did it just turn bullish? Are we going to buy? Okay, and that's the very classic interpretation of MACD using its signal line, okay? There's one more line that I want to talk about. I believe this line was popularized by Linda Ratchke, okay? And it's part of MACD histogram. And so before I kind of start to talk about the other two, I think it makes sense to actually talk about kind of the third line. So I'm going to go ahead and turn it on. Let me go over here. And we're going to talk about MACD histogram for a minute, okay? And I'm going to make it quite a bit fatter. And here you go, okay? No, I need to actually unhide it. So, okay. visible. Let's turn it on. Okay, and I actually prefer a dark gray for the histogram, just a personal preference. Okay, the differential right here, this difference, again, I believe this was popularized by Linda Radke. All it's looking at is the difference between the MACD and its signal line. Okay, so if you totally ignore the signal line and you're just looking for the crossover, when the MACD comes above the signal line, you can see that it happens here. You can see the distance between the signal line and the thing because you'll have a higher peak in MACD histogram. Okay, so you can take a look at either, you could actually look at the MACD without the histogram, or you can just look at the histogram. I'm kind of used to looking at them both. And so I'm going to kind of leave them back out both on there. So there you go. That's all the MACD histogram is. It's just the difference between this MACD and the MACD signal line. Okay. I'm also going to, while I'm kind of playing with it, I'm going to go in, I'm going to add an expert advisor to it. So this is part of MetaStock. Now there's tons and tons and tons of different cool expert advisors. I like to show off the one that does candlesticks. Maybe I'll show it if we have a minute. But a lot of them are designed to help you actually understand how different things work, like MACD. And in fact, when I was prepping this class so many years ago now, I actually looked at kind of the MACD and how this is how I initially learned about MACD and how to use it. And the reason I love that is it's just something you can do too. So let me go ahead and attach it to the chart. I'm going to go ahead and click on close. And I'm going to go ahead and move this a little bit. I prefer it to be right here. So I'm going to put it there. And I'm going to kind of make this a little bit smaller. But we'll talk about what it's doing in a little bit more detail right here. Let me check for questions. Net Akunda wants to know, I hope I didn't misspell that. What is the best moving averages for day traders? That's a really good question, and I think it's a little bit off topic, but part of the testing you can do in MetaStock, there's a couple, I can tell you the ones that I use. I like to use the 3-period exponential moving average as the 8-period exponential moving average, which is also known as the T-line. I think Rick Sadler invented it. Steve Bigelow used it a lot. The 20, the 50, and the 200. But if you're looking at moving averages and you want something that's really short term, just put the 8 on there and take a look at kind of what that does for you. So I think if you wanted to test different moving averages, like you're testing a moving average crossover, you can actually use MetaStock to test that. But I don't know that I'd say anything is the best for anything for anybody. But there's some things that you can look at. Look at the 80 MA. I actually really like having that on my charts. So there you go. I'm just kind of remembering where I was. Okay, so we just attached the expert advisor. And you can see that does help us kind of interpret the MACD quite a bit because we can see if we're in a bearish phase or bullish phase. This just has to do with exactly what I was telling you. Is the MACD above its signal line? If it is, you're in a bullish phase. The MACD is right here above its signal line, which means our MACD histogram is going to be positive, which means we're in a bullish phase. Okay. When that crossover happens, you'll notice on the chart, gives you a nice big buy signal right here. Okay. That's also automatically. Gives you a nice sell signal right here and a nice buy signal here and a nice sell signal here. So it shows you on the chart exactly what's happening. Okay. Here's a sell signal. You can kind of judge just by looking at it how well it works. And I'm going to kind of get back into what I'm talking about so I don't get too far off path. But so the MACD, we talked about the signal line, we talked about the MACD histogram we talked about, okay? And the common uses for MACD, what we're going to talk about now, trend identification. I've already kind of started to talk about that. Are we in a bullish or bearish phase for MACD? That's one of the most common ways to use MACD. Are we up above our signal line? Is our histogram positive? Are we bullish or bearish? So, and that's the common way to look at it. Another one you can look at is a kind of a reversion to the mean, or like an overbought, oversold type of a condition. What I'm going to do just real quickly, so because there's some highlights I want to be able to really have stand out for you, is I'm going to change these to black and white bars so that we can kind of see exactly what's going on. Okay. And there's just some highlights that I want to show you that the MetaStock does. And hopefully there will be some here. I thought we might see some right around here. We did get an overbought or oversold reading there. I'm really not. Let me verify that they're turned on. I'm just not seeing any on the major S&Ps. But I can jump to a different chart just to kind of illustrate it. MACD by MetaStock is on. Let me just go ahead and make sure that the highlights are on. This is kind of a demo machine, so sometimes people will make changes. And so I'm looking for blue and red, and I don't see that. What good one I was looking at the other day? I want to say, oh yeah, it was the Meta, not MetaStock, Facebook. Let me go ahead and look at that. I was actually doing a little bit of an article on this very topic Monday, and it has some great examples of what I want to show you. So we're going to jump over to Meta real quick. And Meta had a nice big run last year. Really started to take off. You'll notice here, you kind of zoom in a little bit on this. The second way you can use MACD, as opposed to like as a buy and a sell thing, is you can look at it as a measurement, or are we getting overbought or are we getting oversold? Okay, so to kind of illustrate that a little bit, I'll kind of zoom in a little bit here. What I want to show you right here is we had a buy signal here. And you notice right here where we started to paint some blue bars. Okay, over here's another good example. In fact, that's the one I think I'm going to look at. Okay, yeah, let's go ahead and kind of zoom in right here. Okay, see where it's starting to paint some blue bars? Okay, what this is indicating is that MACD is stretched. It's in an overbought area. Overbought. I always get overbought and oversold confused. But in this case, I'm saying what I mean to say. This is in an overbought area. Okay. Every time it starts to paint these blues, it means the MACD is stretched. Okay. So right here, this is overbought, oversold. Now, one thing that I would caution you, especially if you're new to technical analysis, is I would caution you around using overbought, oversold indicators, because in my opinion, they're totally legitimate indicators, right? If something goes too far, too fast, there's a general likelihood that there's going to be a reversion to the mean, that it's going to come back, okay? That's not always guaranteed. And one of the first things that you'll learn in technical analysis is the trend is your friend, right? And so just because something's extended, we're in bull markets that extend for years and years and years behind anything that's actually rational, right? And so what I would always caution you to do is if you're looking for overbought, oversold readings, what you're going to want to do is develop a way to confirm that. And an easy way to do that is to watch for the price to start falling. So if you start to see an overbought area here, the next day is still positive, the next day you have a doji and it starts to kind of fade from there, you just want to wait for that price to climb. You don't want to front run a pullback, okay? Because even if the market is irrationally exuberant, the market can stay irrationally exuberant for longer than you can stay funded, right? And so what you want to do is, for any time you're having an overbought, oversold reading, look for a way to confirm that. There's a thing in the expert advisor that I want to show you because I actually think they did a good job of wording it when they put together the expert advisor. So I'm going to open up what we call a commentary window in MetaStock. I'm going to go to View, Expert Commentary. And when I do that, this little dialog box will come open, and that kind of helps us understand what's going on with the MACD. By default, it's way the heck over here in the future, not on this bar that we're talking about. But so that I can identify this, what I'm going to do is I'm going to basically kind of come back over here, and I'm just going to move. You'll see there's a little triangle. What that means is this is the bar that it's looking at. So it's ignoring all of the data past there and looking at the MACD as if we were looking at it back in, what is this, June of 2023? Okay. And it's another way to help you kind of learn about it. So the first methodology that we talked about in terms of meta is identifying trends, okay? And so that's based on the moving average crossover. And so when we look at the commentary over here on the side, it says currently the MACD is bullish since it's been trading above its signal line. The MACD crossed above its signal line 10 days ago. Since MACD crossed above its moving average, not MetaStock, they borrowed it from us, I think, has increased 10% and it's in a range from, so basically right now it's telling you based on MACD it's bullish, and since it turned bullish, it's up 10%. Pretty simple, right? Next is the MACD is in an overbought range. Prices can continue to move higher for some time. Wait for prices to move lower before any short positions. So if you're using this as an overbought, oversold, there's a warning built right into it that basically says, well, okay, we're overbought, but wait for confirmation that it's going to pull back. And that's always a good advice, because here we go. We had 3 days up. It didn't start to pull back. I would say it really started to pull back here. So you want to wait for that confirmation to come in. So there you go. Hello, Vincenzo. It's good to see you. Thanks for coming. Okay. All right. No questions. Just checking. All right. And yeah, we were down around before Meta, actually. There's a reason it's been rated number 1 30 years in a row. Okay. I like to talk about this one. It's a little bit more complicated, but I think it's also important. And I think it's important. I kind of name dropped him a little bit earlier, but we do some sessions, and I should bring him in a little bit more often because he's one of my favorite technicians, and I think he's really, really smart. I'd go as far as saying that Dr. Alexander Elder's Come Into My Trading Room and his other book that, of course, has jumped out of my head should be required reading. They're very, very good. But every time we talk to Dr. Alexander Elder, he talks a lot about MACD divergence, which is the third method we're going to talk about. And what he actually says is with MACD divergence, what he calls it one of the most powerful. Actually, I read his book just a couple of days ago because I quoted it, and he calls divergence in general one of the most powerful forms of signals in all of technical analysis. So it's something that he likes to look at quite a bit. We're going to kind of talk a little bit about how to look at for it, what it identifies on a chart, et cetera, et cetera, et cetera. For MACD divergence, he specifically looks at MACD histogram and kind of where MACD histogram is. So I'm going to kind of zero in on a little bit of an area of the chart right now that includes a little bit of a peak and trough. And I'm just going to draw how to find MACD divergence. And I'm going into this area because it was a really good example of MACD divergence. In fact, I put it in that article I was kind of writing. So let me go ahead and just kind of show you where this is on the chart. Right here. Let me go ahead and kind of grab the trend line. I want to kind of draw your attention to right here on the chart. This peak in price, this peak in MACD, okay, had a pullback, okay? You had a pullback down below zero. Dr. Elder says that that's important, okay? And then you had another resumption or a peak, okay? Actually, I don't think this is exactly the same example I'm looking at. Okay, so, but let's go ahead and just draw it out for you so you can kind of see it when it happens on the chart, okay? Right here, if I draw from this peak to this peak, the difference between this peak and this peak was about 4%, okay? Happened over 30 days, 30 periods, okay? If I was to look at the difference between this peak and this peak, okay, it actually went up 10% too, okay? So in general, I'd say that this line is pointed up and this side is pointing up. That's not divergence. This isn't the example I used in my article yesterday. Hope it's not. So in this case, they're kind of matching up. So we're not seeing a MACD divergence. We did see a pullback afterwards though, okay? But if we're looking for a MACD divergence, if we had a MACD, let me just grab my trend line here. Let's say that the MACD actually went from like this point to this point, okay? Let's say that price had formed a new high, okay? And then that MACD was not backed up by that new price high was not matched with a new high in MACD. In this case, it was. But if it wasn't, that's a MACD divergence. And Alexander Elder says, and I think this is the exact terminology that he uses, or it's very close. When this happens, it's a breaking the back of the bulls. And it's a very, very, it doesn't happen at all market reversals. This one reversed without it, but it is very indicative that a reversal is likely. Okay, so that's 3 ways you can use MACD. You can use it to find the signal line. You can look for it for overbought, oversold, and you can look for it for divergence. And the expert advisor, when it's kind of pointing these things out to you, is going to tell you about all 3 of them. And this particular case, it doesn't see a divergence, but it will look for this for you. So I'm going to delete this off the chart. I'll delete that off of the chart. And let's just kind of talk a little bit more about kind of like how this works. Because we spent, Nat says, do we use the moving average alone? Well, I mean, the purpose of this one is to kind of give you an idea of how MACD works. So this is actually a really good question, Nat. I appreciate it. I wouldn't necessarily recommend that MACD is the best indicator to use. And I'm kind of smiling as I say that because I just spent 41 minutes teaching it to you, but that's okay. The ideas that I want to kind of really nail home is that this methodology is very, very easy to understand. It's easy to use, but more importantly, it's objective, okay? So it's not looking at what's going on in the market right now. It's looking at where support and resistance are, okay? And if you're watching this video and you know MACD, or if you've learned MACD, or if you've learned this already, it's objective. So if you understand why this MACD buy signal is being generated, it's because we went positive on the MACD histogram and we're entering a bullish phase. You can come to that exact same decision and you don't need me to make it for you, right? Here we had a sell because we went into the bearish phase, okay? That's the same. Everybody's going to come to the same decision there. Okay, here you got a MACD buy signal, and everybody that's kind of looking at this can make the same decision because it's objective. It's not subjective. And because it's objective, I can also kind of grade it, right? I can come in here and say, well, if I bought here, we'll say that we waited until the next day because we got our MACD signal at the end of the day, and we bought at 321, and we sold where this sell signal came in at 332, we made about 11 points, okay? Here we would have, if we went short and then bought in again, we probably would have had a wash, okay? If we would have bought in at about 331 and sold where we got the sell signal, that would be at 344. I think that's 13 points. So we can easily tell how well this works, and we can keep it objective and subjective. And I think by having a good plan in place, whether it's MACD or something else, you can keep the discipline in your trading. And remember, I think discipline's way important. It's the most important thing to trading, according to that quote that I selected at the start of the day, right? So that's what the whole point is. Not necessarily is MACD the best indicator. Yeah. When I started, I talked a lot about how I started in sales like forever ago, 20, 30 years ago. I was very grateful for working here. I absolutely trade. I love trading. But when I was a new sales rep particularly, one of the things, even back then, MetaStock, and we've added tons of stuff to it, was a well-seasoned program. So we could talk about, the fact that you could look at candlestick charts, or you could look at point and figure, or you could look at, whatever, right? You could look at bars, whatever you wanted to do. It had hundreds of indicators and all of these different system methodologies, even back then. And very, very quickly, I think that's a big benefit of MetaStock, because you are not going to outgrow MetaStock. It's going to grow with you, okay? But what I'd get a lot from beginners is like, well, it's MACD. I want to trade Facebook. Or I should say Meta. I want to trade Meta. Is MACD the best indicator? Is there other indicators that I could use? What makes the most sense to use? And how well did this work? And we just kind of did it so far in the kind of paper that we looked at. We evaluated how well it worked, and it seemed to work well. But how well is it going to work? If I take every one of these buy and sell signals, how does that compare? And how does that compare to the other methodologies? And that's where technology can really help you these days. So let me kind of run a system test, and I'll just show you what I mean. If we're looking to learn about the market and about indicators, for me, what I would want to do is I'd want to be able to focus on MACD, but only if it's the best, if it works well, if it's something that's going to help me make better trades, right? If it's going to be something that underperforms, doesn't work, why do I care? I want to be able to focus on those methodologies and those indicators that work. And since we're dealing with methods that are objective, we can find out if they work, okay? And so what I'm going to do is I'm going to go ahead and open up our power tools. I'm going to come into a tool that we call a system tester. And what I'm going to do is just going to set up a test. One of the things I love about MetaStock, as I'm kind of selecting a whole bunch of these things, is the fact that it's totally customizable. So if you want to build your own systems, you can. I'm just going to select a bunch that are actually already built into the program, though. So it's very, very easy. If you want to figure out what the best indicator for 60-minute is, you could do an optimized test right here using a moving average crossover with optimization. But what I want to do actually is just select ones that I know are included in MetaStock. And I know how these performance systems are. So I also know that these TTTs are. So we're going to select, I don't know about all of these TTs. We'll leave those alone. But what I'm going to do is I'm going to select a whole bunch of different systems that are in here. I'm going to specifically avoid optimization because it takes a little bit longer to test multiple variables. You can do it though. But I just want to kind of keep things a little bit easy, okay? And of course, I'm going to make sure that I have that MACD system that I showed you. We'll do CCI. Okay, I think that's good enough for now. There are a few hundred systems built into MetaStock, and I'm going to go ahead and test Meta, okay? Now, I will say, I'm biased. I think MetaStock, not Meta the stock, but MetaStock has one of the best system testers that are out there. I'm going to kind of keep it pretty simple today, but you can actually go in and test as many ideas that you want as against as many different stocks. You can test, sometimes people will ask me, can I do like a system test up till 6 months ago and then do a walk forward test and see how visually they perform since 6 months ago. You can do that too, right? But for today, I'm going to keep things fairly simple and just kind of show you how this works on one stock, just to kind of keep it really simple. And for that stock, I'll use Meta. And what I'm going to do is I'm going to say, go back 500 days. We're looking at dailies today. You can do this on shorter time frames if you want to, Nat. But I'm going to go ahead and use daily, and I'm going to go back 500. Every time there's a long trade, I'm going to take it. Every time there's a short trade, I'm going to take it, okay? For my trade options for this simulated test, what I'm going to do is I'm going to start with $10,000. I'm going to trade half of that every time I get a trade. So the first time I get a trade, be $5,000. If my account's up to 20 grand, I'll go to 10 grand. It'll be half of whatever I have, okay? For trade execution, I'm leaving it on realistic market prices. Basically, that waits till the market is closed, confirms there's a signal there, buys at the open next day, okay? I'm going to go ahead and click on OK and go ahead and start that as a system test. I'm going to let it run, okay? It's going to run about 400 tests on Meta right now. And it's going to tell me which of these indicators work best if I took every buy signal, every sell signal, and I used it for 2 years, okay? Any questions? How am I doing? Oh, coffee is good with that snow coming down. It just makes me feel warm inside. Let me go ahead and click on the results here. So again, we took Meta. We took 2 years. It's been kind of a up and down period for 2 years for Meta. Actually, Meta started 2 years ago and went straight down, and then it went kind of straight up. I mean, not straight, subjective, right? But it had a really good uptrend and a really good downtrend and some side trends in there as well. So based on all of those methodologies that we selected, anything that's green up here is indicators that worked well on MetaStock in that, or on Meta the stock, not MetaStock. Meta the stock. I should maybe not do Meta, just because it kind of gets a little bit cumbersome. But okay, I'm sorted by average net profit. So these work good on Meta. These did not work on Facebook. Or maybe I'm just going to say Facebook from now on, just so that I'm not stumbling over myself. Okay. I did actually have an optimized system. I didn't mean to do any optimized system, but the optimized system actually performed the best over the last 2 years with Meta, with Facebook. It made 95%. Okay, had about 5 trades, which isn't bad at all over a 2-year period. That's not very frequent. Because that's actually an optimized system, and I don't want to kind of get into optimized variables, I'm going to go ahead and delete it. We'll ignore it, pretend it didn't happen. Our next best performing system was the directional movement expert system. Okay, over 2 years, it would have been up about 84%, 85%. And it would have had 6 trades. Okay, 3 of those were profitable and 3 weren't. So the batting average there is about 50%, right? It's wrong as much as it is right. But the reason it was profitable because every time it lost $1, it made $8.42 when it won $1 for every dollar it lost. Okay, so our next best performing system, I'd say that looks great. Relative volatility index, I'd like more trades. You could test more data if you wanted to see more trades because 6 isn't a lot. 2 is even less. 76% on our this directional volatility index. Okay, it had 2 trades. Its batting average was also 50-50, but it actually had a better win-loss ratio, 9-1. Okay. Our third best performing system was developed by Tushar Shanley and Stanley Kroll. It's called the Stochastic RSI. It uses stochastic and it actually uses an RSI but puts a stochastic on it to smooth it out a little bit. And the reason I know that is it comes up on the system test a lot. Okay, it had 42 trades, 26 of those were winners, 16 were losers. The average profit versus average loss is 1.57. Okay. I think I'm going to narrow it. I didn't mean to actually resort it. I think what we're going to do is look at this directional movement index. It worked very, very well. 6 trades over the course of 2 years is like 3 trades per year. That's pretty good. For me, I don't like to trade that actively or that often. Actually, I've been trading a lot more active. Anyway, but here we go. We got 3 for 3 average loss is 8.5. If I click on view, it's going to give me a lot of metrics. It's going to say it was 1,200% better than buy and hold. The profit over those 2-year periods were 84%. Okay, our buy and hold was about $664. So instead of making $664 by just holding on to Facebook, I made about $8,500 trading. The things that I do really like to pay attention, though, are profitable versus our unprofitable trades. So we had 3 trades total that were profitable. Okay, out of our 6 trades, again, 3 of them were profitable. 2 of those were long trades. 1 of them was a short trade. Okay, our average profit was about $3,197. Our average loss was about $379. We never had more than 1 loser in a row. Okay, we had 2 winners in a row. Okay, let me go ahead and look at the equity here. And this is another thing that I like to look at. Looks like lately this hasn't been performing very terribly well, but I don't see a lot of big drawdowns. I just say over the course of maybe the last 6 or 8 months, it just kind of hasn't been performing that well. So I might actually kind of kick this out for that. But let's say that we did like this. We wanted to kind of move to the next step, and that is, I think, understanding what the system is doing. I'm going to go ahead and plot this on the chart. And we'll go ahead and look at it. Close. Okay, and so here we've got Meta. Generally a pretty clean chart of Meta. You can see where the longs and shorts come in. You can see where the buy signals were, all that kind of stuff. This is that same equity curve. So when we're in a long position and the stock's going up here, equity's climbing. Okay, if I see this and I like it, or actually I should say, if you see this and you like it, I'd say the next logical thing to do is to understand what's going on in the method, to understand why you're getting a buy sell signal, what indicators are going into this buy and sell signal, all of that kind of good stuff. Because I think if you understand the reason why you're trading, you'll understand You'll have better discipline anyway. Okay, so we're going to zoom in a little bit here on this little price activity right here. You'll see that this is the expert system called the directional movement. So that's what I want to learn about. So I'm going to go ahead and open up our expert advisor again, and this time instead of looking at MACD, I'm going to go up to directional movement. I'll go ahead and attach that to the chart. What I'm going to do is going to also flip open that expert advisor. You'll notice right now it's going to say this is the trade zone. So when I actually applied that, where those buy and sells come in, it gives you a trade zone. Okay. This is the directional movement. It's a system that's unique to MetaStock. Okay. And it uses it plus DI, minus DI, ADX, ADXR. Okay. Those are great indicators. Not going to spend 40 minutes teaching those, but now you know what they're actually using. They're looking at average daily, the ADXR, the ADX, the plus DI, the minus DI. Those are all put together in this. Let's see. Let me go ahead and right now it's looking at the most recent bar. If we're looking at it on like a day where we kind of started to get into a trade zone, let's do right here. Okay, and this is well after like the period where it gave a buy. Actually, the buy was right back here before the trade zone. Actually, let's look at why that happened. Oh, something's. Oh no, it broke. Of course it did. Well, it's something I've been noticing that's happened a little bit lately. There was a great commentary, you saw it, right? Let me go ahead and just try to refresh it to see. Oh man, okay. Well, now I know at least that it was created by the ADX, the ADXI, the DXI, those directional movement indicators. And so if you wanted to learn more about them, you could go to that expert commentary. But you could also start to apply them on a chart. You could also, in MetaStock, there's a super good help file. And if I wanted to kind of look at directional movement there, and kind of come into it, I can tell you what ADX is. The average, that's something moves every day. I could go in and kind of really start to understand what ADX is. Could probably go to our YouTube site, find an ADX video. I don't know that we've done one, but I'm gonna put that on the list. That's something we could definitely talk about a little bit more. The point is though for you is that's how we could find something that works well for us. Obviously, if we're using ADX and it's giving us a 50-50 win rate, that's not a great win rate, but if it's making us, if it's like a 9-to-1 or an 8-to-1, I don't remember the exact number, win per loss, it can be a great system. And maybe we want to start to focus our learning about the ADX. One last thing before I'm going to go a little bit long, maybe 5 minutes long, not too bad. One last thing that I want to show you is if you find something you like, maybe it's the MACD, maybe it's the directional movement or anything like that. If I'm looking at Facebook, I don't have any, I'm in a no trade zone and I haven't had a signal for a while, okay? And so if I wanted to find something that had a signal, this is a tool I use every single day because what I want to be able to do is identify a signal that exists for me now, okay? I can't go back. Schwab doesn't let me, but I can't go back and buy Facebook just because there's a signal 6 months ago. I need to trade today. You probably are in the same scenario, right? So if I do like ADX and the directional movement and those indicators, and I want to find stuff that has an ADX reading, I can come in here. We've got what we call our Explorer. I can come in and find directional movement. Okay, and we're going to do this. I'm going to go ahead and start that exploration. There's a couple of them in here. I'm using the one that matches the expert advisor. But what that's going to do, actually, it's going to run through a couple more first. But that's okay. I don't need to show you the results. What it's going to do is it's right now going to go in and say, hey, what exists right now in the market that I can trade? Now, I want to stress right now for a reason. It's not looking at, this isn't some server-based solution that's looking at a scan that was run yesterday at 7 p.m. or 8 p.m. This is looking today, in the markets today, with the real-time data that I have with MetaStock real-time to tell me if any opportunities exist at this very moment. A lot of people have come in lately and they have very online web-based platforms, but they're just looking at signals that they ran a scan for yesterday, and you can only run whatever their scan universe is and all that kind of stuff. With this scanner, you can run it right now. You can get opportunities that exist right now. You can run it on almost any market on Earth. It's very, very powerful, and I think that's one of the reasons it's been rated #1 for 30 years in a row. The best software in its price category. It's just so functional, so flexible, so powerful. If there's something you want to scan for example, you can create it as a scan. It's easy to do. If you don't want to program it, you can have us do it. We'll do it for $35. So anyway, again, I do love to kind of brag, and I think it is bragging, but 30 years in a row it's been rated #1. So we have 2 different versions of MetaStock. We've got our real-time version, we've got our DC version. And my main goal was to get you to try MetaStock. I've already used it to identify trades today. And I'll use it again tomorrow and the next day. Well, I guess on Monday, we don't trade on Monday, so not that day, but in any case. $265 per month is our real-time version. It comes with a MetaStock. Everything I've showed you today, it's the real-time version. It also comes with a product that's called Zenith. And with Zenith, it's a very, very institutional strength news research platform. One of the best in the market. It's very similar to Bloomberg. But unlike Bloomberg, it doesn't cost you $1,300 a month. It costs you $265 with MetaStock. So we also have an end-of-day version that's $69 per month. And that includes MetaStock and the end-of-day data. Okay. If you want to get started with MetaStock, we're going to include a white glove setup and an installation appointment. So somebody will give you a call. They'll show you, if you want to learn how to run scans, they'll show you how to run scans. If you want to know how to use the expert advisor or the system tester, they'll spend time with you and kind of give you a thorough tour of the program. They'll answer any questions you have. And that's basically, we do that for every customer, because what we've found is that when we start doing that, when we show you how to use MetaStock to help find those better trades, you keep it. And that's, I think, really a key thing. We want you to understand how to use it. Most of our customers have been with us for decades, and we appreciate it. Thank you. Larry, I know you've used MetaStock for a number of years right now. Thanks for using MetaStock. We appreciate you. Okay. You also have access to full, free, unlimited support, access to what we call our Unleash the Power of MetaStock, which is some recorded training that you can go through at your own pace. Very, very cool. So I do love the fact that, it's easy to get software, but like, when was the last time you called a software company and got support and was happy and it was free and available, right? It's just included as part of the thing. And I think that one of the big advantages that MetaStock does bring to the table is that here, let's help you get using these tools. So what I'm going to do today is, if you want to try it, we're going to give you a 3-month trial. If you buy a month, I'll give you the 2nd and 3rd month for free. That'll include MetaStock 18. It'll include any of the data that you need. We have basically packages that include all of North America, Europe, Middle East, and Africa, Asia Pacific. We'll just give you whatever region you need. Okay. We'll also give you that white glove installation, the Unleash the Power of MetaStock. You should try this. If you do the DC version, what day is it today? It's the 11th today. If you do the DC version for $69, you'll be able to play with the software that's literally been rated #1 for 30 years in a row. You'll be able to play with it until April 10th. Okay? And you'll pay $23 per month for that. And as part of that, you'll be able to go through the training, learn it. You'll be able to do that white glove installation. You can call us anytime you have questions. We'll answer it. But I'll tell you this, there's a reason that it's been rated so highly so long. And that's because I believe it helps. I use it. So anyway, give us a call. 800-882-3040. Metastock.com/saleschat. Metastock.com/341. I think that's it for me, guys. Thank you for coming. I hope you learned a little bit about MACD. maybe you enjoyed it. I appreciate you being here. If you like the video, hit like, subscribe to the channel, do all those good things. It helps a great deal. We do appreciate it. Thanks for coming here and being part of it. Stay safe, stay warm. See you soon.
Hi, Kelly Clement here from MetaStock. Before you go, I have 2 quick things for you. 1, thanks for joining us today. We love having you here at our webinars and viewing our videos. So what I'd like to invite you to do before you go is like and subscribe. Like the video, subscribe to the channel. It helps us a great deal and it helps us bring you more awesome content like today's video. The second thing is we have a great ebook on trading that you can get for free. If you go to metastock.com/YouTubebook, you can get a free copy of The Secrets of Successful Traders. It's a great book with lots of content from traders just like yourself who can teach you some of the secrets that they have learned. Thanks for taking a second with me and learning about those 2 things. Thanks for joining us and keep on trading.